Vivek Arya, BofA Securities senior semiconductor analyst, joins us now with a buy, of course, on Nvidia and a price target of 150. I guess the question is, after this stock split, if you're sitting at home wondering if you should be buying Nvidia after a more than 200% run-up in the last year, is now really the right time?
Thank you. Good morning, Sarah. Thank you for having me. I think let's discuss why this is happening. So we think Nvidia is on the right side of three very important mega trends. Number one, the computing industry has discovered this very important new technology called generative AI or large language models. You know, it's like discovering fire, right? That you have this new technology that can help you extract a lot of insights from data. But the thing is that the size of these models is exploding. They are doubling every 6 months. We are up to 2 trillion parameters. And I don't think the computing industry will rest until it gets these models to the size and accuracy of the human brain, which is 100 to 150 trillion parameters. So that's number one, complexity requirement growing. Number two, you have a race between the large customers, right, the cloud service providers, to upgrade their infrastructure to this accelerated way of computing. We are still in very early stages of doing that. And then number three, every boardroom, every CIO, right, every CEO of every enterprise company is talking about how we can incorporate more AI into our business framework, but they can't send their data to the cloud. So they have to develop their own AI infrastructure, and every sovereign country is thinking about the same. So we think Nvidia is on the right side of all these three trends, and that's why we think that the stock can continue to do quite well, because even at this point, despite the run that it has had, it is trading at a lower multiple than the day ChatGPT was announced, and it is trading at less than 1 times its earnings growth versus the S&P 500 that's trading at 2 times earnings growth.
Vivek, you're making a lot of the arguments that Jensen Huang has made for a while. I do wonder, I know you don't necessarily cover enterprise software, but are you and your software desk talking about the degree to which Nvidia might co-opt a big part of that industry?
Yeah, I think there are two different things, Carl. So first of all, you know, with every industry, there are these different cycles where there is a cycle first of a lot of upfront hardware deployment. And then over time, the software industry catches up and takes advantage of that hardware deployment, right? This upfront hardware deployment tends to go for the first 3 to 5 years. I think we are in kind of the second year of that upfront hardware deployment, and Nvidia is leading the charge. But I do think over time, the monetization of this over time, I think that's where the software industry will absolutely be involved. So I see this more as a cyclical issue as opposed to a structural issue.
I mean, you've made the case, and a lot of people are bullish. Do you worry just about the sentiment? First of all, it's turned around and is now higher this morning. It's so hot. It's so consensus. It's the best stock in the market. It is more and more of the market. The CEO is signing women's shirts. Like, do you worry about that kind of stuff?
I think those issues always have to be, right? These stocks move because of fundamentals and because of sentiment. I think you have captured the sentiment. It's a very well-owned stock. But a few things that we find in our research is that if you actually look at the stock's ownership among large institutional buyers, they are essentially market weight on an average, right? They are not overweight the stock. They're essentially market weight, right? That's number one. Number two, on the fundamental side, as I mentioned, stocks don't move up and down just because of sentiment. They move when the size of the market is growing and when the company is executing extremely well. And I think that's where Nvidia is checking those two points very consistently.